Hello everybody, welcome back to our channel and thanks for tuning in. Let's go straight to the point. As expected, the Federal Reserve raised its policy rate by 25 basis points, but most importantly, Jay Powell said that ongoing increases in rates will be appropriated. If you watch our last video, we point out that the price of gold had a good upside run due to the market expectations of a pause in interest rate hikes. However, the 25 basis points this week was already priced in. As the Fed officials informed that more rates will be appropriated, it naturally made the price of gold pull back. That was highly predictable that announcing future rate hikes would cause negative effect in the price of gold and silver. The announcement of future interest rate hikes made the dollar stronger, and as commodities are priced in dollars, stronger dollars means you need less currency to trade for commodities. Gold and silver are commodities just like oil, gas, iron ore. Consequently, the price of commodities went down. On the week, gold dropped 3.24%, closing the week at $1,864 an ounce. Silver lost 5.13% and closed Friday at $22.35 an ounce. Will I take advantage to buy gold and silver after this pullback? Not yet. Most analysts are very bullish on silver this year, as they are every year, but I'm not one of them. I'm not planning to buy a single ounce of silver this year. I also published a video talking about the case for silver in 2023, which you'll find the link on the description. Gold. Will I buy gold now at this price level? Also not. If you consider that the price of gold has been since the mid-2020 in the range of $1,700 to $2,070, gold is now somewhere in the middle of the price range, which means that the markets are currently pricing gold at the fair value. So, if I buy 1 ounce gold coin considering the premium, it will not give me a good profit margin even if gold reaches the top of the price range of $2,070, at least in short term. Now, if I'm planning to hold that gold coin for 5-10 years, then it's a completely different story. But I believe gold should pull back until March, or at least trade sideways. Gold was already priced considering the market expectations of a rate hike pause that probably will not be happening before March. It's all about market sentiment, but remember, Jay Powell said the Fed would prefer overdoing the rate hikes than doing too little. Also, Jay Powell said that people should prepare for pain ahead. It's funny, when the Fed is pumping the markets, people say don't fight the Fed. But when the Fed is tightening the economy and telling people to prepare for pain, people no longer use the mantra don't fight the Fed. Instead, they like to believe that the Fed is bluffing. The price of gold moves slowly, so there is no rush for me to buy it. I could give the price forecast for next week, but if you are an investor, it doesn't really matter what the price of gold will do next week or the week after, but how gold will protect your wealth in long term. There is no secret. Buy at low prices and you will do well. I just believe that, considering the price range of gold for the past 2 years, the current level of $1,864 per ounce is fair, but not a low price. The easiest way to predict the price of gold is forecasting the dollar. In fact, in medium to long term, the dollar will get weaker and should lose a bit of its global dominance. We all know that countries are trying to move away from the dollar, so the logical protection that is no one's liability is gold. Many central banks, especially in the East, are increasing their gold reserves. China has secretly increased its gold reserves for years, and is now publicly announcing that they are buying gold. But there's also a lot of speculation. One of them is the creation of the BRICS currency backed by gold. BRICS is a group of countries formed by Brazil, Russia, India, China and South Africa. But Brazil, that is a member of the BRICS, recently announced that they are making studies to create a common currency for Latin America, starting with Brazil and Argentina. So how come the BRICS are talking about creating a common currency if one of its members is talking about creating a currency with other bloc? That doesn't make much sense. Or there is something even bigger behind the scenes that we don't know yet, like Brazil creating a currency with Latin America, China, India and Russia creating as well a common currency in Asia, and other member of the group, South Africa, creating a similar common currency in Africa, and eventually the BRICS combine all these currencies in one. These common currencies don't even need to be backed by gold to reduce the dollar dominance in global trading. And as explained, lower dollar means higher price of commodities, including gold and silver. Friends, this is just speculation. But now, if part of your wealth is in gold, you can exchange later to any currency that you want, dollar, euro, or the new Latin America currency, or the future BRICS currency if it ever comes to existence. This will complete the video for today. Thanks for watching, protect your wealth, stay safe, take care.